Be Wealthy and Smart, episode 1267.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is the Fed finished raising interest rates? Because there's a lot of signals that the market is giving that may just be the case. For example, yesterday, yields on treasuries kept sliding early, and that pushed stocks higher as the debate raged over whether the Fed was done raising interest rates or not. The 2-year Treasury note was at 4.954%, and 10-year Treasury notes had fallen all the way to 4.691% after briefly topping 5% just 2 weeks ago. And when we look at the CME FedWatch tool that takes interest rates into account and predicts what future interest rates are going to do, there was less than a 1 in 7 probability, which is about 14.6% is all, that the Fed is going to raise rates at its December 13th meeting. The CME tool has a high probability of being correct, and in the past when the CME tool has predicted no more interest rate hikes, it's been right, even when the Fed has been indicating something different. And this is showing us that inflation is trending down. According to London's Capital Economics, they said as inflation weakens, yields will probably drop further but settle at a much higher level than before the pandemic. Well, we'll see about that, but the important thing is yields are starting to trend down. And this is the signal we've been waiting for that the Fed is done raising interest rates. The market is starting to take off, just like I've been saying would happen, because interest rates are trending lower. That's because inflation has been trending lower and joblessness has been a little bit higher. The weekly jobless claims on Thursday were a little bit higher to 217,000 for the week ending October 28th, which was more than the 210,000 the previous week and the 214,000, which was the consensus estimate from Dow Jones. With that sign of softening inflation and easing in the labor market, labor costs fell by 0.8% in the third quarter compared to expectations for a 0.7% increase from economists polled by Dow Jones. And when we look at the futures pricing, it's also telling us that the first interest rate cut could come as soon as May, but I have odds that it's going to happen well before then. Investors are still highly bearish, though. Bearishness over the short term for stocks has climbed to 50.3% in the latest weekly survey from the American Association of Individual Investors, which is the highest since Christmas of 2022, and up from 43.2% last week and far above the historical average of 31% for a 7th week. Bullishness, or people expecting the market to go up, has dropped to just 24.3% in a weekly poll, which is the weakest since mid-May, and down from 29.3% last week and below the historical average of 37.5% for a 3rd week. That's good news if you're a contrarian investor like I am, who believes that whatever the crowd is doing, the opposite will happen. And that's usually the case, especially when everybody's on one side or the other. When they're at extreme fear or extreme greed, this is when markets can tend to turn. And although a lot of people have been saying they're expecting a big stock market crash, you don't have crashes when people are feeling extreme fear, which is where we are now. You have crashes when people are feeling extreme greed, which is what's going on more in the crypto market at this time. All of the people who are expecting the crypto ETF for spot Bitcoin to get approved have been extremely bullish, and that has led to extreme greed on the sentiment charts for crypto. So look out there, because that's where we could see a pullback. And just as I had said, the NASDAQ was ready to take off again, that same day as I published my podcast, The NASDAQ 100 posted its biggest one-day gain since August 29th. We are in for a major run in stocks, especially technology stocks, but also a broader stock market rally across the S&P 500, which we haven't seen for a while. The S&P's been a little anemic this year, at least compared to the NASDAQ, which has been on fire, mainly due to AI boosting the value of technology stocks, and just a handful of them at that. But with the bond market confirming the trend that interest rates are starting to decline, they're telling us that inflation's coming down, the Fed is done raising interest rates, and that's what's going to send the stock market on a tear and have it rise unexpectedly for a lot of people. There's still a lot of cash on the sidelines, cash and bonds, where people are trying to protect their principal because they're still very negative and expecting the market to decline. But unfortunately, the crowd is usually wrong, and I think that's the case right now, where we're seeing, once again, the contrarian mindset is the right indicator here, and the market starts to take off. People are going to be very surprised at how much the market goes up when there's still so much negativity around. And unfortunately, what usually happens is people sit on the sidelines, they watch the market rise in disbelief, and then they get in when the market's much higher, when it is much more risky to invest. This is the lower risk time to invest, when everybody's bearish, and the market already had a sharp decline last year and just finished another correction in October. We've got all that short covering ahead of us. We've got year-end window dressing I've been talking about. We have higher unemployment, lower inflation, and the Fed being finished raising interest rates. All of this is great news for the stock market. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.